Thank you all very much for being with us, and apologies that it's so hectic. You can see senators running hither and thither trying to keep up with hearings in the floor. I read all of your testimony last night, and of course we're lucky to have all of you, 4 individuals with lots of expertise in this area. And I come to really try to zero in on a couple of factual judgments, and it really stems from some of the discussions you and I have had, Dr. Juergen, with respect to changes in the energy business. And let me ask specifically about the oil futures business. When I look at the numbers, it seems to me that there has been a dramatic change in the last 4 years. And I want to just see if we can get on the record whether you share that view. It looks to me like 4 years ago, the non-commercial trader, the person who's in effect called a speculator, these traders held less than half of the futures contracts for crude oil. So a number of years ago, we were talking about people who held these futures. They were trucking companies, they were airlines, these kind of people who weren't traders. Now, today, according to the chairman of the Commodities Futures Trading Commission, these traders now account for 85% of the crude oil futures market. And I read your testimony last night, and none of you touched on this factor, the changes in the oil futures market. So I think the first question I want to get into, we just go right down the row. Do each of you believe that this change in the significant number of traders, commercial traders in the oil futures market is significant? Just a yes or no. Let's go down the row. Doctor?
Maybe is not allowed. I mean, that's really, I actually think it's a legitimate question and one that we're very interested in. But it's hard, well, you want a very short answer. You don't want me to take your time.
We're not imposing any gag orders.
Okay, well, that's good. Because one of the questions is, first of all, there's a lot of, because someone has a title or how they're categorized as an organization, does not necessarily tell you what the motivation is behind a particular trade, is one question. The other thing is there's a lot of activity that goes on off the exchanges that are not included in the data. But I would say, the general perception, I would tend to agree with you that there's a lot more activity. But I'm just trying to be straightforward.
We're just going to try to see if we can get some facts on the record, and then I'm going to ask some questions that'll get into your opinions. Dr. Juergen.
Well, it's hard
particularly for you, because you have educated me on the fact there are a lot of changes going on, and because you all didn't touch on this one in your testimony, I just want to see if you all share my view that this has been a significant change.
Well, I think, yes, it's been a significant change. I don't think, based upon our understanding today, that it is the driving force that can accentuate things. I was thinking that when there was a crisis with Iran in 1979 and 80, there were no futures markets, and the price also went up very sharply. So that it's part of the mix and a very visible part. I guess, Frank, it's your graphic.
So, Senator, part of the reason I think we didn't go in detail in any of our testimony was because at one point I think we anticipated a second panel with the commissioners, CFTC commissioners. So we're going to leave that kind of to their area of expertise. I agree with what Howard and Dan have said. I mean, I think there's been a change in the market. I don't want to characterize it as necessarily good or bad. There are new players. It's part of what we're calling the new fundamentals, which used to be just supply, demand, and inventory. There's a lot more. It's a lot more complex market.
Okay.
Yeah, I think the reason it wasn't really highlighted in testimony is that we're reasonably happy with the supply-demand explanations as to where prices are and why they've behaved. There's not a big residual left over to be explained by something else. And so in that sense, I don't think that change makes a difference as to where the price is today. I think come back on it, in some ways this is a great American business success story, the success of the exchanges in deepening the liquidity, deepening the involvement. For me, more liquidity is a good thing. These are a small part of, a significant part, but of a very large global oil market that makes up, which has all kinds of other bits on top of it. Seeing more liquidity come on to regulated exchanges, again, should actually be seen as a good news. I much prefer to see activity taking place somewhere where I can see it. So I don't think it's a problem in terms of increasing prices. One further thing on this, and just go back on stuff, I do think we do need to draw a distinction between activity by institutional investors and hedge funds.
Let me just see if I can get one additional question in. Goldman Sachs has produced an analysis suggesting that the speculation premium on crude oil could be $23 a barrel or 56 cents a gallon at the pump. The Consumer Federation produced their analysis, concluding speculation adds 20% to the price at the pump, or roughly 50 cents. A year ago, as we discussed briefly earlier, the ExxonMobil CEO stated that speculation had increased the price of a barrel of oil by $20. Now, can I just get a yes or no with respect to this question, whether you think these analyses, because all three of them agree that there was a speculative premium for a barrel of oil. I would just like to know whether the four of you think that all of these analyses are wrong. Let's just go right down the row, and I've taken an extra minute, but they were three separate analyses done by three different organizations with different philosophical roots, and all of them concluded that there was a speculation premium. And I'd just like to know if you think those analyses are wrong. Let's just go right down the row.
I mean, I would want to read the specific studies first before I commented on them, but I think a lot of the issue, sometimes the different assessments of the role of speculation have to do with the standard of proof or burden of proof that's applied. If you apply an innocent until proven guilty beyond a reasonable doubt standard, I think my reading of the literature as a whole, not just these three studies, which I haven't read, is that speculation wouldn't be convicted. If instead you look, the guilt is confirmed unless innocence is demonstrated beyond a reasonable doubt, that some jurisdictions use when considering whether to exonerate and release convicted prisoners, speculation is probably not going to get out of jail anytime soon. So, we can keep on having this discussion.
I'm going to take that as a no. You think these analyses
Well, no, I said I don't know what's your stand. I have a feeling that different people who have this discussion are really applying different standards of proof, and that's the issue as much as the competition of these different results. That's my view.
Dr. Yergin.
Oil prices, gasoline prices are both up 20% since the UN issued its report about Iran's nuclear program. So I would not call it a speculative premium. I'd call it a risk premium or a security premium. But there is a premium that reflects this increased tension and anxiety in the market.
And not surprisingly, I agree with both Howard and Deanna. I mean, I think that there is a premium in the market over and above finding and development costs. I wouldn't attribute it all to speculation, and I would like to see what the studies are, and the definitions are really important, Senator.
Yeah, likewise, it's a no from me. Those studies don't sound, those results don't sound very plausible. I think part of the evidence of this is if there was a large speculative premium, then prices would then be higher than a market price, which should mean that we'd be seeing large surpluses building up. People in the physical market will be asking for discounts because they want to pay the proper physical price, not the inflated speculative price. What we actually see is in the international physical market today, in Brent, people paying large premiums to get their deliveries accelerated. It's quite the reverse. There is no global surplus building up. Instead, we have limited spare capacity. We've had 8 straight quarters of global inventory draws. We finally have a balanced market at this price. So I just think that it's incorrect to think in terms of speculative premium.
Let's go to Senator Murkowski. I just think it's striking, gentlemen, when all four of you say that organizations from Goldman Sachs to the CEO of Mobil are off base, we've got to do some more digging on this, because I will tell you, I don't just operate under the assumption that somebody with a Xerox machine can turn out a study and that ought to be what we make public policy. But when you have this cross-section of groups and individuals representing such a wide array of philosophies, saying that there's a significant speculation, premium, that's something that has to be addressed by policymakers.